Welcome to Kitco News. I'm Niels Christensen. The gold market has seen some consistent selling pressure over the last few days. However, we've also seen some resilience in the marketplace as prices have managed to hold support around $1,700 an ounce. Here to talk about his views on the gold market and the price action that we're seeing is George Gero, Managing Director of RBC Wealth Management. Thank you very much for joining us today, George.
Thank you very much for having me. I think these are interesting times, as we say.
I think that might be actually an understatement. I don't know. Let's jump right into this. I mean, what are your thoughts? I mean, we see gold. It did drop down on did drop Wednesday to a 1 month low, but it managed to push back up and retake that $1,700 mark. Are you surprised at how sticky support is being in the marketplace?
Well, I'm not surprised at the support because all month I've seen the ETFs getting new money to buy gold and silver. But of course, the ETF holders are very different than the traders that are trading on the exchanges. And the gold that's traded on the exchanges is a very misunderstood gold because some traders believe it's really a hedge against stock market. I mean, for a long time, when stocks were up, gold was down. When stocks were down, gold was up. Then it became a trading vehicle against interest rates. Then it became a trading vehicle against major currencies. And people were worried about the US dollar being very strong, making gold expensive. But then we kept saying, don't count gold out because of the strong dollar, because the dollar was strong not because of higher interest rates recently, but because other currencies and other interest rates in 21 countries were lower than the US dollar. But in the last week, with this major surge up in stocks, with the economic global reopening, gold has started to weaken. Gold has been weakening because traders are looking for other opportunities all the time. And open interest on the COMEX on a daily basis has been telling me that not only has there been a sell-off in gold, but the open interest ever since the last option expiration on the 26th of May has been faltering. Open interest means the sum total of longs and shorts in any one contract.
Right now, it seems its biggest competitor is equity markets. But I'm just sort of wondering, I mean, like we saw on Wednesday, ADP showed 2.7 million job losses in last month. We haven't got the official numbers yet from non-farm payrolls, but I guess I'm sort of wondering, I mean, do you think enthusiasm in equities is a little misplaced?
Well, it could be overdone. We'll find out Friday when we see jobs numbers and the reaction thereafter. I have been thinking that next week, when we go back to basics and we're past the jobs numbers, that the usual and economic and other worries that investors face globally will return to the gold price being boosted by all these worries again being as we get closer to elections in the US, you're going to see volatility because you're going to see all sorts of economic and political headlines, some from the Democrats, some from the Republicans. You're going to see more Federal Reserve possible statements. And in the past, whenever you had a Federal Reserve statement or a federal or a Fed spokesperson, gold always pulled back temporarily. Now, I feel this is a temporary good pullback, just as the pullback that we had when the Venezuelan gold was being sold by the Bank of England. And that gold was being sold when gold was looking strong. And I wouldn't be surprised that due to the recent litigation with Venezuela and two news items again, that there could have been some selling going on in London as well.
So what do you think we break out of this channel that we've been in for the past month? I mean, we've sort of been trading between 1700 and call it 1760 and change, 1780. Um, do you think this is where we stick the rest of the summer? Do you see sort of any breakout on the horizon?
I'm going to see more ups and downs. I'm going to
Hmm.
see when interest rates are not going either in the direction of negative rates, as some people think, and it happened in London recently, that when gold resumes its normal place as a very important hedge against currency debasing and inflation. By the way, inflation, all you have to do is go to your local supermarket and you're going to see inflation. What we forget is that we had very terrible growing area problems, Puerto Rico.
Hmm.
Then you
Hmm.
had the floods, the hurricanes, you had the fires in California, you had floods, you had more hurricanes. Could really ignite inflationary thoughts in the
Hmm.
investor's mind. And so I think over the long term, towards the end of the year, I'm still looking for $1,800 area gold price. And I'm considering that we would have an over $18 silver price.
Obviously you're bullish on gold. There's a lot of things driving prices, but this is we have seen some selling pressure. So my question, what area would you be concerned for this rally? Like how low can prices go in the short term and still remain in an uptrend?
Well, when gold starts to move, one of the problems is that there are very few open orders.
Hmm.
And the headline traders, the high frequency traders, the artificial intelligence traders, they trade on headlines. And in gold, you don't have to wait for an uptick or borrow stock in order to go short. You just sell and or you just buy based on what your perception is at the moment. And on top of everything else, traders who use technical guides have sell stops and buy stops. And when we
Hmm.
go through what's perceived as a support area, then you have a lot of sell stops. And there were sell stops at 1720, and there were sell stops at 1710. And of course, when those are hit without resting open buy orders, they just continue to zoom up, and then on the way back up, they zoom up.
Switching gears a little bit here, silver. You say you have a target for $18 silver by the end of the year. Um, what's going to drive prices for silver? And I'm sort of wondering, are you worried about weak industrial demand for silver?
To the contrary, with the reopening of global economies, I'm looking for more uses for silver. The industrial part of silver, until recently, was a headwind, and silver
Mhm.
grudgingly moved back up with gold. And then it became a tailwind with the reopening of economies, and silver took a life of its own and started to perform and did go over 18. But then when the funds have to sell and margin calls hit, then both gold and silver are usually sold at the same time in order to raise funds. And margins have been very, very strong. And there have been
Mhm.
daily margin calls and intraday calls at FCMs, which is futures commissions merchants. And so the avoidance of margin calls had led to more selling than we normally would see.
That's perfect, George. Thank you very much for taking the time to talk with us today.
Thank you, and I really enjoyed being here, and thank you again.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.